Good morning, everyone. Can someone please confirm if you can hear me?
Morning, Marjorie. Yes, we can hear you.
Okay, thank you so much. Thank you everyone for joining right on time. And I will not waste any much of your time. And I would like to thank you all for setting time aside in your busy schedules. I know some of you are at work and you have other things that you could have been doing, but you've set time aside to come and join us today as we unpack this new product that is soon to be listed on the Victoria Falls Stock Exchange, the first mutual gold ETF. Can someone confirm again if you can hear me? I see in the chat box someone commented no audio.
I can hear you.
Okay, noted. Thank you so much. So today we have a very well-rounded team of experienced individuals that are going to be unpacking this new product. And please feel free to ask questions, to make any inquiries that you can. No question is small, no question is silly, because you need to have every little bit of detail that you can before you invest in this product. So we have Sandra Munyoro from the Victoria Falls Stock Exchange. She's going to be one of our presenters. And from the sponsoring broker of the product, we have Tadiwa, who's also going to give us a presentation. And most importantly, from the issuer of the product itself, First Mutual Wealth, we have Sibaba Ngwendeza and Tendai Gutima, who are also going to take us through this new product. So just a few housekeeping rules before we start. Kindly make sure that at all times your audios and videos are disabled to avoid distractions during presentations. And if you have any questions during any presentation, please feel free to post them in the chat box. We will attend to some of the questions in between the presentations and the rest at the end of all presentations by our esteemed presenters. So yeah, without wasting much of your time, let me introduce the first presenter of the day, who is Sandra Munyoro, and she's a business development specialist at the Victoria Falls Stock Exchange. She holds a Bachelor of Commerce honors degree in banking and investment management from National University of Science and Technology, and she is currently a CFA Level 2 candidate. She joined the exchange in 2021, and she was part of the team that was spearheading introduction of these new products like the real estate investment trusts and exchange traded funds. So she has quite a bit of experience under her belt in terms of such products. So she's going to give us an overview of the Victoria Falls Stock Exchange, its role, and this new product that is coming onto the exchange and what it means for the exchange and the investors themselves. So over to you, Sandra. You can go ahead and make your presentation.
All right. Thank you very much, Marjorie, for that introduction. Good morning once again, ladies and gentlemen. If you can kindly confirm that I am audible.
Yes, Sandra, I can hear you.
All right, thank you very much. If you can just allow me to share my screen. I have a very short presentation that I'm going to present today. So I'm going to share my screen and take you through that short presentation. Just confirm that you can see my screen. Thank you very much for that confirmation. So in terms of my presentation today, we'll talk about what is an ETF, what is an exchange traded fund. We'll look at the various regulations that are there that are regulating the exchange traded funds, as well as our role in that regulation. And then thirdly, we'll look at the structure of exchange traded funds, and we'll look at the parties that are involved in exchange traded funds. So exchange traded funds can either be local or international. For example, if you've been following the market, there are some local exchange traded funds that are currently trading on the Zimbabwe Stock Exchange. And we also have got what we call international exchange traded fund. So in terms of their makeup and their structure, it's more or less the same. But when it comes to international ETFs, it is an ETF that invests specifically in foreign-based securities. The focus may be global, regional, or on a specific country, and may hold equities or fixed income securities or track a country-specific benchmark or index. For example, a local fund manager like FMW or a bank can create a portfolio of the New York Stock Exchange S&P 500, which then is listed on the VFX and becomes accessible to local investors. So in simple terms, what I'm simply saying is that an exchange traded fund is a product whereby a fund manager gathers certain instruments from a country. It could be from the New York Stock Exchange. It gathers securities that are on the New York Stock Exchange of the S&P 500. And then from those securities, they combine them into one single basket. And that basket, they subdivide it into smaller units, which are called exchange traded fund units, which are then listed on the Victoria Falls Stock Exchange. So what this essentially means is that as an investor, if you invest on this ETF, you are essentially getting exposure to the underlying assets. So the underlying assets in this instance becomes whatever securities are underlying that particular exchange traded fund. And in our presentation today, as FMW is going to unpack, you will realize that in terms of the theme that they have chosen, in terms of the securities that they have chosen, they will unpack to us what is underlying in terms of that particular exchange traded fund. Okay, and then in terms of the regulations that are there, so there's been new regulation that has been introduced, which is SI 62 of 2026 and SI 63 of 2026, which essentially are going to be governing how these ETFs and REITs are going to be managed on the exchange. So SI 62 of 2026 basically outlines the Victoria Falls Stock Exchange membership listing and trading rules, which also gives us the power to supervise and overlook these exchange traded funds. So all the funds that you see on the market, we have authority to oversee and to supervise in terms of how they are operating. And also SI 63 of 2026 as well, which is the Securities, Capital Markets and Collective Investment Funds Regulations of 2026, are the ones that provide the specific investment regulations that has to do with how these exchange traded funds are formed. Then in terms of the structure of these exchange traded funds, firstly, they are open-ended. So being open-ended simply means that they can continue to grow in perpetuity. So at any given time, the fund can bring more units to the market, which they can make available to the market, or they can also redeem some units from the exchange traded fund. So them being open-ended means that they can either go either side, so they can increase the number of securities that are there, or the number of securities that are they can be reduced. So and then the second one is that the ETF is set up like a trust. So other securities that are there on the Victoria Falls Stock Exchange, the companies that are there, they are set up in terms of the Companies and Other Business Entities Act. And then when it comes to the exchange traded fund, it is set up under the collective investment schemes, which is set up as a trust. So it's set up as a separate institution from the fund manager's operation. They register a trust and they move those underlying securities to be under the trust. So ownership of the securities that are underlying that particular investment, for example, we spoke about the S&P 500. So if the fund manager decides to invest into the S&P 500, it means that the underlying units will then be owned and managed under the trust. So essentially, this is just a measure to try and protect the unit holders, to say everything that is to do with this particular ETF will be done and managed through the trust itself. So as investors, if you subscribe into an ETF, you buy units of the trust. So after the trust is invested into the underlying securities, those securities are then gathered into a basket and subdivided into smaller units. So those smaller units are the ones that now are traded on the Victoria Falls Stock Exchange as units to that particular ETF. So essentially what this means is that the trust owns the underlying assets, and then the unit holders, they own the units of that trust. And then last but not least, units can be created and redeemed through authorized participants. So earlier we mentioned that the fund is open-ended, so which means units can be created or redeemed. So it means the number of securities in the underlying basket can be added or reduced. So for example, in the underlying basket, you've got those the S&P 500 companies. You can essentially be able to create and redeem those underlying securities, resulting in the increase or decrease of the units in the trust. And this process is done through the authorized participant. And the authorized participant in this case is selected by the fund manager. And then in terms of the various parties that are involved in an ETF, so we've got a trustee. So the trustee in this instance is usually a financial institution, which is essentially responsible for holding the underlying securities, and ultimately they are the ones that managing, for a lack of better word, they are the ones managing the trust itself. They are essentially responsible for the securities that are underlying in that exchange-traded fund. And then there's also the custodian, which is also usually a financial institution, which is also responsible for being the custodian of these units that will be traded onto the exchange. And then there's also an important stakeholders, which is the investors themselves, whom are referred to as unit holders when it comes to exchange-traded funds. So unit holders become the ones that buy into the units of this particular ETF, and then they are ultimately the owners of the underlying instruments. And also there's the fund manager. So the fund manager essentially is the institution that is responsible for managing the day-to-day running of the fund. They are usually the sponsor of the fund. They are the ones that put up the securities, the initial securities that will be there to form and build the fund. So they are essentially responsible for the day-to-day running. So in the ETF today, that will be unpacked by FMW. They are the fund manager of the fund that they will be talking about today. And then there are also other service providers that are there in ETFs. You've got your lawyers, you've got your auditors that are there to provide services that may be required by an exchange-traded fund. So this just brings me to the end of my presentation. So at this point, I'll just stop sharing and hand back over to the moderator.
Thank you so much, Sandra, for such a well-rounded presentation on what ETFs are and the role that the exchanges actually played in making sure that there is legislation in place for such products to be introduced onto the platform. If anyone has any questions for Sandra, you are free to post them in the chat box. We will attend to them in and between all these presentations that we are going to have. Right now, I'd like to invite Simba to just give us a general overview of the product, what their thought process was when coming up with this product, and what they're looking forward to have being brought to the market by this product. And Simba is the fund manager at First Mutual Wealth, and he holds an honors degree in economics, and he cleared his CFA level 2. And he has quite a number of certifications in data science for investment professionals, Python career track data analyst, He is also an Investment Professional Association of Zimbabwe member and a judge member of the Financial Gazette Top Company Survey. In terms of experience, he has 15 years experience as an investment professional in Zimbabwe, working under different business units for blue chip rated financial services companies, as well as an up and coming investment banking group. He has experience as both a buy side and sell side research analyst at Old Mutual Investment Group, as an economic analyst and as a research analyst at Old Mutual Securities, and also a senior associate of research at Akribos Research Services before he joined First Mutual Wealth as a senior investment analyst. Also at First Mutual Wealth, Simba has subsequently been promoted to fund manager, and he currently supervises the research function and subsequent portfolio management and trading for the First Mutual Holdings Limited Group. He also likes to give back to where he came from. He's a mentor for National University of Science and Technology, winning team for the inaugural CFA Research Challenge in Zimbabwe. He also recently passed his data science certification for investment professionals from the CFA Institute, and he regularly volunteers for CFA-related educational programs. And additionally, Simba is at an advanced stage of completing a senior management development program at Stellenbosch University, and he's due to complete that in 2026. So he is quite experienced, and he also has the papers to prove that. So over to you, Simba. Take it up.
Thank you, Marjorie. Thank you, Sandra, for your presentations and introduction. I didn't realize that I had done quite a lot in terms of the background, but thank you for that introduction. I'll try to be brief. For the First Mutual Wealth Gold ETF, what we saw was that the Zimbabwean market had a gap. Zimbabwe's economy is largely supported by gold exports, but for the investment industry, at least the former investment industry, there was no real asset where Zimbabwean investors could actually participate in international gold markets. We do have a very fluid policy environment, so we're looking for something that could actually give investors the opportunity to invest in gold and not necessarily carry some of the issues to do with the Zimbabwean environment in terms of the risk and even the returns profile that we saw in the market. So that was our thinking when we actually formulated this product. I'm sure some of the features have already been touched on in terms of the functionality of the exchange traded fund, but essentially it's going to be an easy way for retail investors such as yourselves to actually participate in whatever you see in international markets in terms of what is happening to the gold price. And I'm sure that my colleague Tendaishe will give you a lot of backdrop as to what is actually backing this asset. Our expectations is that we're going to create a savings product for retail investors that can last into the long term and not be affected by some of the vagaries that we have sometimes in the Zimbabwean market. We do have initial investment approval, exchange control approval to invest $10 million US, but we're thinking bigger than that. Hopefully with the support that we get from retail investors such as yourselves, we can then approach the Reserve Bank of Zimbabwe to extend our exchange control approval beyond the 10 million that we've been granted. So I won't belabor the point too much. I'll leave it on to Tendaishe's capable hands to give you a presentation of the First Mutual Wealth Gold Exchange Traded Fund. We're very proud and happy of this product. It's the first of its kind in Zimbabwe, and would also like you to join us in this journey, which we think is a very good product in terms of allowing you to save for the future and participate in the riches of gold as a commodity. So thank you, and I pass it over to Tendaishe to take it on.
Thank you, Simba, for giving us this brief background of how you came about this concept. And we are very much glad when the exchange has rules. They also need such innovative issuers to bring the product onto the market. So we thank you so much for making what the exchange had put in place in terms of the rules come to light by introducing the first exchange-traded fund on the Victoria Falls Stock Exchange. So maybe before Tendaishe comes in and gets in deep the product, just a question from Arnold Ganga. I think this one is for Sandra. He's asking what's the impact of SI 64, maybe particularly to this product. What is the impact of these new regulations that have come in terms of such products like exchange traded funds?
All right, thank you very much for that question. So SI 64 of 2026 does not directly impact the exchange traded funds. This is SI 64 is more targeted towards companies that want to register. So perhaps as a bit of background to the investors, there are new regulations that just recently come out in 2026. So this regulation essentially are regulating the Victoria Falls Exchange as part of the Victoria Falls International Financial Services Center. So previously, the Victoria Falls Stock Exchange was regulated by the Securities and Exchange Commission of Zimbabwe. So with the formation of the Victoria Falls International Financial Services Center, which is supposed to be a center which will be located inside the special economic zone. So its major mandate is to attract foreign direct investments to make sure that the ease of doing business is simplified. So the whole thrust of these regulations that just recently came out is to ensure that investing and the movement of funds inside the International Financial Services Center is as seamless as possible. And as the Victoria Falls Stock Exchange through SI 29 of 2025, we were then designated to be part of the Offshore Financial Services Center. So there's been recent regulations that came out, which is SI 62 and 63, that directly impact the Victoria Falls Stock Exchange, and in turn, they directly impact exchange traded funds. So in terms of how these SIs are going to affect the FMW, so SI 63 defines what collective investment schemes is, and it's in line with what FMW had already done. And they also, SI 62 also defines what an exchange traded fund is and how that fund is supposed to be managed, who is supposed to manage that fund. So at the moment, we are not anticipating that anything that can stop the FMW ETF. So everything is on course. But then SI 63 of 2026 also gives, there's a clause on the transitioning period of everything that is listed on the Victoria Falls Stock Exchange. So they've been given up to 24 months to transition in terms of aligning with everything that has to do with the Offshore Financial Services Center. But we are happy to say that collective investment schemes are defined in terms of SI 63, and they are defined as trusts, which is already what FMW had registered their trust as. And SI 62 also defines what an exchange traded fund is, and FMW, that is the route also that they had adopted in terms of their exchange traded fund. So I hope Arnold you answered. Thank you very much.
Thank you, Sandra, for attending to that question. I'm seeing everyone is charged up. The chat box is full of inquisitive people asking questions. So maybe at the risk of having some of the things that are in Tendaishe's presentation unpacked by these questions, I will allow Tendaishe to do her presentation. Then if some of these questions that are in the chat box are not answered during her presentation, we'll come back to them. So the next presenter that we have is Tendaishe Gwitima. She is part of the business development team at First Mutual Wealth, and she has been watching the financial markets since 2013, analyzing and structuring investment portfolios for individuals and institutional investors. She has helped investors find quality investment-grade investments, assist institutional investors in asset allocation, portfolio restructuring, and investment strategy. She has experience in covering equity investment and research, investment analysis, portfolio management, interest-bearing investment, institutional client engagement, and risk management. She holds a Bachelor of Commerce honors degree in finance from the National University of Science and Technology. So as you can see, it's like everyone who has presented or talked so far has some roots at NAST. I don't know what they are being fed there, but it seems they have quite experience and knowledge when it comes to these products. And she is currently a CFA level 3 candidate. So without wasting much of your time, I will hand over to Tendai She to do a deep dive into the product. Over to you, Tendai.
Thank you, Judy, for that introduction. A very good morning to you all, and welcome to the first Mutual Wealth Gold ETF. Maybe just a few seconds as I upload our presentation. There you have it, ladies and gentlemen. If I can also get a bit of confirmation if I am audible, and also if members can actually see the presentation that I've shared.
You are audible and the presentation is up.
Okay. Once again, good morning, everyone. We are very excited and would want to welcome you to our new product, which is the first Mutual Wealth Gold ETF. Is one of my colleagues, Simba Mangwendeza, actually alluded to say that we are very excited about this product. We believe that you have the necessary value that you need from it. Before we actually dive in, I would also want to probably share with you the journey that we are going to share together today as we unpack what First Mutual Wealth Gold ETF is. So basically, we're going to start off with the background. I believe that part of the background has been unpacked a little bit by what Simba has also presented in regarding what was our thought process, what is it that we are trying to address in our own market. And I also think Sandra has also spoken to explain, to say, what is it that we mean when we say an exchange traded fund, which we are going to, will be referring to as an ETF in short as we go forward. So the second section, we're going to talk about the constituents. I think from what has been discussed earlier on, it's actually quite clear that it's a basket of instruments that have been put together with a common theme. But what section 2 will actually do to us today is to say, which are these instruments? What does this basket consist of? When you say to yourself, I am investing $1 in the First Mutual Wealth Gold ETF. Then we're going to talk about the historical returns and portfolio rebalancing to say, as we go forward, this is a combined basket of different instruments. What has they been, how have they been performing before being bundled up together by First Mutual Wealth to be able to have you being able to invest in it? And how are we going to maintain that team as we go forward? And as we conclude on our discussion, we have Taliwa on board, who is going to take us on the salient features of the product, the benefits, and also the risks of the product. So to just maybe add on to what Simba is unpacked around, what is the scope behind the First Mutual Gold ETF? What is it that First Mutual Gold, so what is that First Mutual Wealth team actually thought of, or what was enlightening us to actually come back to the market to say, we have something for you. We believe that we can add value. We can be innovating. We can be very quite innovative in our market. So what we have done as First Mutual Wealth, the scope is to say we wanted to offer something different. We want to offer diversity for the investor. And we wanted to innovate around something that is not readily available for investors in our market. And in that regard, we identify 5 gold assets, which an ETF could be listed on the Victoria Falls Stock Exchange. And the main drive on listing is to make sure that it's accessible to any Zimbabwean investors, you and me, among others. So we are saying It's a whole spectrum from an individual investor up to an institutional investor. We are all covered, and this is why we actually aiming, or we are actually listing on the Victoria Falls Stock Exchange. So we are providing something different, innovative, new experience, and we are making it accessible to you. On this slide, we're just trying to make sure that we are all on the same level to say, when we say an ETF or an exchange traded fund, what is it that we are referring to? And I think Sandra in here earlier on our presentation quite explained this very well, but obviously would want to take it in the context of the products that we are talking about today, or that we're actually unpacking to you. So for the exchange traded fund, it's the bundling of a variety of instruments or investments in a single basket. But what is more common there with those instruments is that they do have a common theme. And today, as much as ETFs can take different sectors, different themes, today our First Mutual Gold ETF, it's a commodity-based ETF. And in that commodity aspect, we have actually chosen gold only. So it's not going to be mixed with other commodities or minerals, but it's just specifically to do with gold. So this is what an ETF is, and this is what also entails the First Mutual Gold ETF. So what we have done here, we've put together instruments or securities that tracks the price of the physical gold, and which is also among most of the important characteristics or offerings to you as the investor. Is it offers a convenient way for you to invest in this precious metal, which is gold, without you actually going and holding the physical commodity, without you actually mining the physical commodity and actually keeping it in a vault. So this is the experience that we've brought to you today, and we also want to make sure that you understand what it entails. So the First Mutual Gold ETF is the first of its kind, like Simba mentioned in his earlier presentation or brief. But we are saying to ourselves in the Zimbabwean economy, it's the first of its kind. How does it fare or compare to other major asset classes? Because for the investor, we are saying that you've participated in other traditional assets. But when this new product is coming through from First Mutual Wealth, where does it stand? Or how do I compare it? So we've actually summarized some of the key features or elements that an investor actually consider when they are investing. And this is risk level. So when we compare to it with other traditional assets, which includes also in this case real estate, we are saying the risk level when we're comparing to those is actually medium, not too low, not too high, but the risk level is medium. And we are unpacking this slide so that it also helps you in actually familiarizing with this product and also to inform your decision making as we go forward. In terms of income generation, as much as our product is commodity based, we have actually made sure that in our combination or in combining these constituents or this basket, we've made sure that there is income generation. Gold itself, it's a commodity based, but we've also included some of the listed gold mining companies on the Johannesburg Stock Exchange that will also bring through income generation through the dividends that will be actually declared. So in a nutshell, we are saying those dividends that will be declared will actually filter through to you as an investor. And this will also give you that income generation characteristic or as part of your income as you invest in this gold ETF. Hedge against inflation, commodity by its nature, it's an excellent hedge against inflation. Correlation with Zimbabwe economy, this is an offshore investment. Therefore, we are saying there is low correlation with the Zimbabwean economy in two aspects. Number one, the way the gold price is actually determined, it's globally determined, and this product is tracking the gold price. And resultantly, you find out that correlation with what is actually happening in our Zimbabwean economy will be quite low. Secondly, all these instruments or this basket of instruments contains or constitutes listed counters on the Johannesburg Stock Exchange. Resultantly, we are saying where these counters or instruments are primarily listed, it's in South Africa on the Johannesburg Stock Exchange, hence explains the low correlation with the Zim economy. To just conclude this discussion, we'll touch on two other aspects to say we expect the liquidity to be quite high. It's going to be listed on the 8th of May 2026 on the Victoria Falls Stock Exchange. And also the primary market, which is the Johannesburg Stock Exchange, has got more depth when we compare to our local stock exchanges. Therefore, this offers liquidity by its nature. And lastly, there's quite a minimum investment to allow you and me to participate in this product, as low as $100 US dollars. Management cost very low, and they're to be they're at 0.5%, and total costs are less than 1%. As we conclude on this first section, which is the background of this presentation, we just want you to key takeaways, which also were discussed earlier on in the few slides that we've actually unpacked. But for you, for your decision making and to carry throughout the remainder of the presentation, we want you to be aware that this offers currency diversification, country risk diversification. We've talked about them listed on the Johannesburg Stock Exchange, the primary market being the Johannesburg Stock Exchange, and also that the global price is actually, the gold price is actually globally priced. Then also, we also have access to global markets. I think much of the access to global markets will be quite clear as we unpack the constituents and what they are, where they are listed, among others. And lastly, for our own SME economy, financial protection, we have discussed about hedge against inflation. This is the value pack that we are actually bringing to you, our investor, to say, have offshore experience, have the uniqueness of actually participating in gold as an investor, just for $100, which was not there previously. And let's diversify our own portfolio engagements, and let's not lose on such opportunities to have new experience and to grow our investments and returns. As we conclude, we want to say to you, we don't work alone, and we have onboarded experts in critical elements of this product. So to start off with, we've got First Mutual Wealth as the manager for this product, and also as an authorized participant. I think the aspects of who is the manager, what is the manager, what is the authorized participants in an exchange rate fund. Sandra actually took time to delve on that. In terms of our sponsoring broker, we do have Akribos on board, and Akribos is also our market maker. In terms of the transfer agents, we do have COPSERV. On the legal advisors and the legal issues, we do have Mshorua Moyo on board. We would also want to say to you, this product is audited, and Becca Tilly will be handling the auditing of this product. And to conclude this, we also have a custodian and trustee on board, and this is CBZ Custodial Services and CBZ Bank, respectively. This marks the end of our first section of the presentation, which is the background. And I'll pause or hand over to Marjorie for questions before we move on to the next section, which is unpacking the constituents and what exactly that you'll be investing in when you actually invest $1 in the First Mutual Wealth Gold ETF. Thank you very much, and over to you, Marjorie.
Thank you so much, Tendai. People are very pumped and they are posting questions in the chat box. I'm seeing some have already been answered, but probably for the benefit of everyone else, we can then have the questions answered on audio as well. So I think this one I will direct it to Simba. During your presentation, you've mentioned that it's from Tatenda Moronda, and they say, when you say that the ETF manages the fund, who is the ETF? A trust usually has beneficiaries and trustees. How are these roles duplicated in the ETF? So maybe they just want to see the clarity of the roles that are there in an ETF, who is playing a particular role, so that they can differentiate if there's any duplication of duties or services in the ETF. Who is who manages, who is the ETF, who is the unit holder, probably just to break down the structure of an ETF and all the parties that are involved.
Okay, thank you for that question. I had responded to it in the chat, and I think Sandra also did some justice in her presentation. So the fund manager manages the ETF, and the trust beneficiaries are the unit holders of the ETF, which can be the potential retail investors that we're pitching to today. I think that's the simplest response to that inquiry. I think there might have been some confusion between what an ETF is and what the manager actually does, but that's the structure.
Thank you for that. And Tatenda had already acknowledged being answered, but I had to just read this out for the benefit of everyone else who might have had the same confusion in terms of the structure. I think this question I would pose it to Tendai. Rufaro is asking, can individuals also invest in this ETF?
Thank you, Major. Yes, individuals can actually invest in this gold ETF. I think the minimum amount fully accommodate an individual, and also that was the motivation of having the minimum amount at just $100 to allow individuals to have a fair share to enjoy the product as well and diversify their portfolios. So yes, individuals will be on board. Chadiwa in her presentation at the tail end will actually dive deeper into highlighting what are the onboarding requirements, what is it that you have to do as an individual and also as an institution and a trustee, in a trust covering all aspects to say, what is it that can I do? What is that you can do to actually be part of this product? And I'm sure she will be able to hand out you through that process. Thank you.
Sorry, Major, you're on mute.
Thank you so much. I was saying thank you, Tendai, for answering the question, and I hope Rufaro is also answered. And probably we'll take one last question before we move to the next section. And I will direct this to Sandra. Adam asks, how many offshore ETFs are currently offered on the VFX?
All right, thank you, Majuri. Thank you, Adam, for that question. So this is the first ETF on the VFX. And as Tendai had said, it's the first of its own kind. It's the first ETF that tracks international securities in the Zimbabwean capital markets. So we do have ETFs that are on the Zimbabwe Stock Exchange, which are essentially track securities that are local, that listed in the local market. So there are 4 ETFs on the Zimbabwe Stock Exchange, but these are local ETFs. They track securities that are in Zimbabwe. On the Victoria Falls Stock Exchange, this is the first ETF, and it's also the first ETF that actually tracks securities that are outside Zimbabwe. Thank you.
Thank you, Sandra. I will allow Tendai to carry on with your presentation and get to the next part about the ETF constituents. Over to you, Tendai.
Thank you, Mayor Judy. So now we are moving on to the second section, which are the constituents. And for the benefit of members, I would also want to reiterate to say an ETF or this ETF consists of 5 securities, a basket of 5 securities that we've bundled together. Their weightings are different, and we'll also unpack on that. And we are saying to you in simple terms, when you say I have $1 invested in the First Mutual Wealth Gold ETF, what is it that you're actually investing? And when we say your dollar investment in the First Mutual Wealth Gold ETF, it's actually offering you offshore investment in what proportions and which are those offshore securities that are constituting that $1 that you have invested. So I'll start off with the one with the highest weighting. The total weightings of these 5 securities is going to be 100%. The first one, which is the highest weighting and which is also the main theme of this product and also anchoring the gold theme, is the One Invest Gold ETF, which has got 50% in terms of weighting. So the One Invest Gold ETF, it's a gold ETF that is listed on the Johannesburg Stock Exchange, and it actually has got gold reserves stored in South Africa and UK. And we are saying that to you, this is what actually has got that aspect for this basket of securities, for you to have actual exposure in the gold or actual direct exposure in the gold. So to you, we are saying you're actually investing directly in gold commodity with this participation or in this investment in the One Invest Gold ETF, because there are actually reserves, gold reserves are stored in vaults in South Africa and also in the in UK. So this is the commodity aspect, the commodity investment in the gold. And as we move further to the remaining 50%, this remaining 50% has actually been split across 4 listed gold mining companies. And I'll just go have a run through at them. But they actually have got an equal weighting of 12.5% each. And when we actually want to, maybe for a further familiarization with what is happening back home, it's as good as our Caledonia or Padenga in terms of they mine gold and they're also listed and they also declare dividends. But we are saying for these 4 listed gold mining companies, they are listed on the Johannesburg Stock Exchange, and I'll go through them. So the first one that I'm going to discuss on, it's Gold Fields. 12.5% is listed on the Johannesburg Stock Exchange, and it's a gold-based mining company. Then secondly, we do have Anglo Gold. We have actually shared some of the logos for your further familiarization. Probably want to go and check on your own on the Johannesburg Stock Exchange. So for Anglo Gold Ashanti, it's actually listed on the Johannesburg Stock Exchange, New York Stock Exchange, and lastly, Ghana Stock Exchange. This, I think, this multi-listing also entails more transparency as we invest in this product. We do have Harmony Gold. It's also dually listed on the Johannesburg Stock Exchange, New York Stock Exchange, and we're saying it's a gold mining company that is listed. Lastly, to conclude on the constituents, we also do have DRD Gold Limited, and it's also dually listed on the Johannesburg Stock Exchange and also the New York Stock Exchange. And we're saying for its holding company, it actually owns plants involved in the surface treatment of gold. So ladies and gentlemen, here you have it. This is what entails your dollar investment in the First Mutual Wealth Gold ETF. These are the constituents that will actually be part of what you'll be holding or exposure that you'll be actually holding as you participate or as you take or accompany us in this journey of increasing your investment through the First Mutual Wealth Gold ETF. So before we proceed to the last section that I'm going to actually present on before Taliwa comes in, I can actually pause maybe for questions and hand over to Marjorie in case there are questions regarding the constituents that we've actually unpacked and shared with you. Over to you, Marjorie.
Thank you, Tendai. One question that's in the chat box from Sean. It says the underlying investments are all South African based, which gives the ETF as much rand exposure as gold exposure. Are there any plans to diversify your underlying investment? So probably they're asking, as per your deed, are you only confined to JSE listed companies, or you can have other instruments in the ETF that are outside of JSE in order to reduce this exposure to the rand?
All right. Thank you, Marjorie, for that question. Probably I can take this first and also allow other members who also want to participate in it in terms of explaining, but I'll take it first. So in terms of our deed, the main theme is we're going to focus on this Johannesburg Stock Exchange in these counters. This is also to ensure that, like you rightfully said, that rand exposure. So for investor who is coming through for this product, they would have actually calculated the risk and actually decided on this kind of exposure. So as we go forward, we are not going to mix it with other currencies or with other exchanges. So we are actually maintaining the theme as per of our deed, so that we ensure that whatever you invest in, the exposure that you decide on, it will be something that will be actually maintained as we go forward. And that also helps us in maintaining the theme of the product, and also for our investors to understand what they're getting themselves into, the exposure, and that being maintained as we go forward. So we are going to maintain that, but also something that we're also going to unpack in the third section in terms of how we'll be rebalancing this as we go forward, and also substitution. But I think I'll also wait for that section and also unpack in terms of how some of the substitution will be done on the Johannesburg Stock Exchange. We are saying that we are limiting it to the Johannesburg Stock Exchange, but I think in terms of how we are going to be doing it to ensure the theme is maintained, the exposure is maintained, and the risk can be calculated from the investor perspective fairly, is something that I also talk and discuss under the section of portfolio rebalancing. I'm not sure if other colleagues from the team, Agribos, First Mutual Wealth, if they would also want to come in with a response around this issue. Thank you, Marjorie.
That is well noted. I am seeing some of the questions, if not most of the questions in the chat box, are related to risk. I'm sure there is going to be a section that specifically speaks to the risks associated with this product, and probably the mitigatory measures that the issuer, together with their sponsoring broker, have come up with in order to hedge against such. Maybe just one last question before you move to the next section. I will. You mentioned that the minimum investment amount is $100. So Norman is asking, is it the minimum for an initial purchase, and going forward, a person can invest any amount that they want? They just want that clarity.
Thank you for that. So initial purchase, and also as we go forward, you can do 100. If I'm not mistaken, I think the other limit could be $50. Probably I can call in Tadiwa to just probably enlighten us more on the additional contributions minimum amount as we go forward.
Good morning. Thank you, Tendai. Thank you, Marjorie. So for the retail investors that are logged in on C-Trade, there is a special that they are offering where they will pull the funds from C-Trade. So the minimum for C-Trade, I think they're starting as little as $20. And if they do reach $100 each time, they will send through the subscription. However, for the VFEX Direct, I am not sure yet, but it should be similar to the normal it should be similar to the normal channel investors that come through the broker. So the minimum for those individuals is $100, but I will unpack more in my presentation when it's my turn. Thank you.
Thank you, Tadiwa. Tenda, I will allow you to do the next section before we take any more questions again.
Thank you, Marjorie, and members, welcome once again to the third section where we are unpacking the historical returns and also portfolio rebalancing. So in this section, what we mean by historical returns, we are saying we are launching the product to you, or maybe we are unpacking the product to you today. But this securities has always been listed on the Johannesburg Stock Exchange. What we have done is First Mutual Wealth Gold ETF, or it's First Mutual Wealth team. What we have done is to actually offer a convenient way for you to get these instruments without going through the RBZ Excon approval, among other brokerage expenses, among others, and also to just have you on board without much hassle and also having the exposure. But it's not that these constituents are actually opening door today. They've always been in existence. So what we've done as First Mutual Wealth is to say, if we simulate the returns backwards to say, if we had this product years back, what could have been the returns? And we believe that this background will also shed more light to you to say, Is it this a sound product? Is this basket sound? Has this basket proven itself over time or in historical basis? And also take an opportunity onwards to say, as we look into the future, where is the gold price? So that we make a well-informed decision to say, where are we coming from? Are these instruments sound? And can they actually, were they performing on their own? And as we go forward, what is the color of the atmosphere around the gold prices? And lastly, we'll talk about portfolio rebalancing. And with portfolio rebalancing, we are saying to you as the investor, we understand the weights are different. We understand that price movements will happen each and every day. And this ETF will also be priced on a daily basis. And as of today, it's 11.85, which is almost at the 12 cents mark. But we are saying as we go forward, we want to ensure that your dollar constitutes 50% in the one invest and 12.5% in those other securities. And we are going to be rebalancing to ensure that you can calculate your risk, understand the theme, we maintain the theme so that the First Mutual Wealth Gold ETF that you're investing today in terms of how the product is structured is the same one that you continue with. And as we go forward in your investment journey with this product. So for the historical returns, we are referring to the simulated historical returns. So for year to date, we are actually speaking to say, where have you been? Where have we been ever since the beginning of the year? And we've actually put across the USD returns versus the RAND returns, given that the primary listing and risk and returns are going to be in RAND. But obviously, as we have mentioned, your investment is actually going to be in USD returns. So the gold bars in this case are also going to guide you more compared to the gray bars, because you as the investor are actually going to invest the real dollar. Hence, we've actually made this comparison. And I think also the movements in the bars or the difference in the bars will also enlighten you in terms of if there are concerns around a risk between RAND and USD, to say in terms of when we actually get to the returns based for someone who is in USD, what is the impact? And I think from this bars, we can actually see that the impact is quite minimum. So let's focus on the actual gold bars, and this will speak more to what we're actually investing in. So in the last 12 months, the return has been 109%, versus 104 when you compare to the primary return, which is in RAND. 3 years back, if we had invested in this product, 248.5%, versus 249. 5 year back, 242 against 255. And the compound annual growth rate for a 5 year, we're actually saying it's as good as 28% for both, depending whether we are calculating it from the primary returns, which is the RAND or the USD returns. So ladies and gentlemen, in summary, we are saying that this product has proven itself, has been sound, and this justifies the fundamental benefits that comes with this product. As we go forward, we are saying to you, yes, the product is quite sound, but what does it entail for you? Because your investment today would want to earn a return into the future. And that's where we actually have made an effort to put across the gold price focused returns for you. What we have just done, we've obtained information from different international suppliers of research around the outlook on gold prices. And these are reputable institutions, but we also want to put a disclaimer to you, the investor, to say these are not guaranteed. But I think for our purposes today, for unpacking this product, it goes a long way in shedding more color to what will likely happen. Currently, the gold price in the first quarter had weakened, had shed some of the returns that we actually had been obtained last year at the tail end. But we are saying it's a good time to buy at around 4.6. As we go forward, this is the outlook. More is expected. So we've done 2 columns, which are also focused, which are at the tail end of the slides, which is the 1-year forecast returns and also the 3-year forecast returns. So what this timelines also do is also to say to you as the investor, if I have a 1-year horizon, what does it entail for me if I invest today in the First Mutual Wealth Gold ETF? And for the 3-year forecast to say, these are just examples. If I want to be in for 3 years, what does it entail and where is the gold prices? But I think from what we have here for the 1-year forecast return or for 1-year investment horizon for those considering this investment, we are saying the range is quite varied, to say from 110 to being the upper end and as low as 26.1 being the lower end. But all we are saying to you today is to say all is in the green, which means there's a gain. Hence, probably shedding more light to you to say, as much as we have got our ups and downs, shedding, and also the development that are happening in the international space, we are saying there's still value for you to participate in this product, being informed by this gold price. For those who are actually looking for a medium-term perspective, which is a 3-year forecast, we are saying the range is still as wide and varied, but we're also saying the upper end is actually tipped off a little bit. I think this is also explained by the timeline to say the 3-year forecast at 89.2 versus 26.1 at the lower end. But the key takeaway for you, the investor, to say there's light, there are gains as we go into the future. Now that the price have actually dipped a little bit, it's an opportunity for you to get into this product whilst it's cheaper, affordable, coming from a lower base to whatever increases and returns that will actually be informed as we go forward, will actually make sure that you're on the higher end of actually receiving the returns. As we conclude this section 3, would also want to say to you, we understand what we are doing in terms of this product, and we ensure that the risk, the theme is maintained across your investment horizon period. And for that, we'll be rebalancing this portfolio for you, or this product for you, every quarter. So this is a time-based rebalancing. And also to say the composition of the companies, I think it also further explains the other question that came through to say, are we going to move to other exchanges? Are we going to move to other currencies? We are saying to you, we are maintaining the currency, we are maintaining the exchange, but for those 4 counters, mining gold companies, which are not the gold ETF, we have that in our deed, that ability to actually substitute some of the companies that will not be performing. Probably some companies might go under corporate rescue, close business, have other challenges, corporate governance, among other challenges that will also affect performance. So to ensure that you as the investor, you have value, we've managed to get that flexibility in our prospectus and deed to say we can substitute as per our research in what makes sense for you, and you'll be also involved in you'll be also informed as this are also happening, these changes are happening to you as the investor. But we are maintaining 50% for the gold commodity ETF, which is one invest, and 12.5% for each and every gold mining company. This marks the section 3 of the presentation, and I'll pause for questions. Over to you, Marjorie. Thank you.
Thank you, Tendai. I will go straight to the questions so that we are right on time, because there are so many that we need to tackle. Again, Simba had already responded in the chat box, but I think for the benefit of everyone else as well, he can answer on audio so that everyone hears this. But today I was asking, I think he had done a bit of research prior to joining this. He's saying that the listing date is 8 May and you have a target of $10 million US. He wants to know what happens if this target is not met by the 8th of May. Does it mean that the ETF will not list, or what?
Thank you, Basrai, for that question. So yes, we do have a target of 10 million for the fund currently. And the question to state, if we don't reach the 10 million, what will happen? So the VFX had a target for us to list the asset if we could get a minimum of $500,000 worth of First Mutual Wealth Gold ETF unit subscribers. So far, we've managed to receive subscriptions of 2.3 million US dollars. So I think that answers the question in that we are going to list because we've breached the minimum of 500,000. Subscriptions will still remain open until we get to the $10 million, even if we do go over the 8th of May target date. Our intention is to actually grow this fund further, just depending on the interest that we see from you, the potential investors. We do have leeway in our exchange control approval process to actually apply for further exchange control approval above the 10 million that has actually been indicated in there. So we don't have to reach the 10 million to list, is all I'm saying. We currently had to reach about 500,000 US dollars, and we've already reached that. So there's no risk of the asset not listing on the VFX. Or maybe the VFX would want to comment on that, but I'm sure we've also done all the correct applications as well. So I hope that answers the question.
Sandra from VFX, I don't know if you have anything else to add.
I think Simba did that justice to that question. Maybe just to add to say that, so as I had mentioned earlier, I want to say ETFs are open-ended funds. So it means the fund can continue to grow up until it reaches a certain point that is determined by the fund manager themselves that they want to get to that point. So when it comes to our minimum requirements in terms of listing ETFs on the VFX, there is nothing that is stopping FMW to list their ETF at the moment. So I think that's all from me.
Okay, thank you, Sandra. This question was from Shingi. Shingi was asking about if there are any issues to do with conflict. Earlier in Tendai's presentation, she mentioned the participants or the professionals that are involved in this ETF, and they noted some relations to some. So they're saying CBZ is both the custodian and trustee. Agribos is both the sponsoring broker and the market maker. And Agribos Wealth Managers is the second largest shareholder in CBZ. So given these relations between these companies, they are asking if there are any issues to do with conflict of interest when it comes to these participants that are involved in this particular ETF. Simba, you're on mute.
Apologies for that. So in terms of the VFX listing guidelines, you'll note that certain products require certain service providers. For example, me as an individual, I cannot buy shares directly on the VFX. I actually have to go through a broker. And for safe custody of the assets for clients, us as the fund managers, we cannot keep assets directly that belong to the public, which is potential investors. So Agribos and CBZ are contracted as service providers in those different respects. You'll note that CBZ is a bank. They also have a safe custody function as well. So they are hired in that capacity of being a safe custody participant in this ETF. Agribos is a stockbroker, and they're also hired as a market maker. So they only participate to the extent that those services are prescribed to them. They do not have control over the actual management of the fund. That lies with First Mutual Wealth, and I'm sure that cancels out the potential conflicts that might actually arise. So they're only contracted as service providers, and they're not involved in the management of the fund.
Thank you for that, Simba. And Sandra, maybe you can also add in terms of your VFX regulations, which parties are key to be independent so that there's no conflict. You can expand on that.
All right, thank you very much, Marjorie. Thank you also, Simba. I think you did do justice to the question. So I just want to add so that we can give comfort to the investors. So in terms of the regulations, our regulation, what we require separation in order to reduce conflict of interest, we require that the fund manager and the trustee should be two separate organizations. So I'll give an example to say that if FMW has a bank, a wing under their group of companies which has got trustee license, they cannot have FMW as the manager and also have got one of their subsidiaries as the trustee, as that will create conflict. How does that arise? So the trust deed, which is the governing piece of legislation when it comes to these ETFs, these collective investment schemes, separates the role that is played by the fund managers and the trustees. There are decisions that can be made by the fund manager in their own terms or in terms of their own rights that they have as the fund manager. But then they are decisions where they need approval of the trustee. So once these institutions are two separate institutions, it means that whatever that, if the trustee does not agree, the fund manager cannot go ahead. And then there also comes in a third layer, which is unit holders themselves, which is you, the investors. There are also certain decisions that First Mutual cannot make without consulting the unit holders first. So the unit holders need to also vote on certain circumstances. So in terms of conflict of interest, it's managed in terms of that layer to say that there are things that can be done by the fund manager and there are things that can be done by the trustee, and these have to be two separate organizations. In this case, it is FMW, First Mutual Wealth, with the fund manager and CBZ, and those two do not have a link. And then in terms of the market maker and the sponsoring broker, so the role of the sponsoring broker is just to assist the issuer in terms of listing, and the role of the market maker is just to provide liquidity on the market when you're buying and selling your shares on the market. So essentially, the sponsoring broker does not have any authority in terms of decision making. Decision making lies with the fund manager, the trustee, and the unit holders. And then in terms of I'm sure in terms of the COBE and how all these things are managed, in terms of the powers the shareholders have over certain institutions, those regulations are covered under the COBE, where management of certain businesses cannot be interfered in terms of influence that shareholders have, etc., etc. But essentially, the fund manager, the sponsoring broker is just there to assist with the listing process. They don't necessarily they are not part of the day-to-day management of that fund. The day-to-day management of the fund is done by the fund manager, and the trustee is there to approve certain decisions that are made by the fund manager. So the trustee actually defines the point to which the trustee comes in, and then in the point to which unit holders have to vote on certain issues. So the way in which this trust or this collective investment scheme is managed is more or less to say all the power doesn't necessarily lie with the fund managers. They have to get approvals from the trustees. They have to get approvals from the unit holders. So like Tendai said that according to their trust deed, they invest on assets on the JSE. So fund manager cannot wake up today and say, I'm now investing on securities that are on the New York Stock Exchange, and then make that decision without consulting the unit holders. So the trust deed actually ties them to the decisions that they can make to ensure that we also reduce that conflict where they do things where that might not be transparent or clear. I hope you answered.
Thank you, Sandra. I hope they've gotten some comfort in terms of independence of the key parties, which are the manager of the fund and the trustee. This question, I'm sure Tendai put up some numbers when she was doing her previous section, and Godfrey was asking, are these theoretical comparisons or you have backtested your product already? Please enlighten us on how did you backtest and provide us with metrics such as turnover, weight, stability, and if it's an actively managed fund, but if it must be at least backtested again against the passive ETF for us to realize the benefits of a passive. So maybe Simba, you can come in and clarify, is this a passively managed fund? Is it actively managed? And how these figures came about when you're doing your analysis?
Okay, I'll try to be as brief and concise as to the point. So the exchange traded fund is a passively managed fund. It's only rebalanced once every quarter. So you note that from the prospectus document, we're supposed to have 50% in the gold ETF on the JSE and 12.5% in each of the mining companies listed in the prospectus document to make the 100%. So because there are price changes that happen throughout the quarter, we then rebalance this position once every quarter. We really don't see the value in having an actively managed exchange traded fund, because then it then defeats the whole purpose of having that theme, following that gold backed ETF. Also, we do it so that when you buy the gold ETF, you know exactly what you're buying. You can imagine if we are consistently changing the weights and trying to chase something that is responding to every single news bulletin that comes in. You won't know whether or not you're buying 90% gold ETF and 10% gold mining companies in January, and then at the end of the year, you're buying 20% gold mining companies and 80% gold ETF. So that's how we've structured the product. We also do that so that we don't incur significant trading costs by having an actively managed exchange traded fund. The other reason as well is, if you note that for example, the S&P 500 exchange traded fund, it's also passively managed, because what they try to do is to just maintain the same weight for the S&P 500, so that when investors are misinformed and making mistakes, the exchange traded fund is not making the same mistakes. And over the long term, the S&P 500 will actually outperform any fund manager that participates in that market. So those are the decisions for having that passive management to the exchange traded fund. Then regards the weightings, how we arrived at the 12.5%. So when we did this fund, we're also trying to appeal to pension fund investors. Pension funds, according to IPEC regulations, cannot invest more than 50% in a single asset class, hence the 50% gold ETF. And then they also cannot invest more than 15% in a single listed equity, hence the 12.5% that we have in each of the constituent gold mining companies. So that should there come a time where a pension fund requires express exchange control approval to purchase these securities offshore, the First Mutual of Gold ETF can also be compliant with those requirements. So I hope that answers those questions.
All right. I hope the audience is answered, and to me it was clear. So in the interest of time, I will allow the next section to be presented, and we'll take more questions later. So the next presenter is Tadiwa Muronda. She is from Agribos Securities, who is the sponsoring broker of this product that we are soon to list on the exchange. So Tadiwa is the client liaison officer, and she has experience in sponsoring broker advisory, capital markets transactions, regulations, and compliance, as well as product development. She has been involved in quite a number of transactions, including the listing of Dadvest Exchange Traded Fund, the delisting and subsequent relisting of Simplo on the VFX. And she has also contributed to several transactions to do with acquisitions, mergers, and takeovers involving listed companies. She holds a Bachelor of Science honors degree in economics from Africa University, and she is currently a candidate of the SciFM JSE registered persons examinations. So she's going to use her, she actually did use her practical experience in also bringing this product on board, and I will allow her to go ahead and do her presentation on the benefits, the risks, and everything else that has been left behind by Tendai from the presentation. Over to you, Tadiwa.
All right, thank you, Marjorie. So I will try and shorten my presentation, given that I'm left with about 7 minutes. So most of the first two slides has been mentioned earlier, and I think even in the questions they were addressed, but just to summarize the entire presentation. So on the benefits on my left, this is explaining the benefits of the ETF. And then on the right, it's explaining the benefits to the investor. So we do have diversification because there's low correlation with traditional assets, which are your actual cash, your bank balances, the equities. And then also it's inflation hedging, since gold acts as an inflation hedge as well. And then you have high liquidity, given that it's trading on an exchange, and also it has assets that are linked to the JSE, and we're also creating new products for new investors to come into the market. So there's also unit creation in that aspect. And then you also have country risk diversification, seeing that you're not directly linked to the Zimbabwe market, and it's gold commodities and listed gold mining companies that are listed outside Zimbabwe. And then on the right, the benefits of the ETF to the investor. So you have low costs, as mentioned earlier, less management fees, and the total fees that you'll incur are 0.6%. And then there's also transparency. So the NAV, which is the net asset value in this instance, which is the price, will be beamed on the First Mutual Wealth website, their investor relations website, and also on the VFEX website. And since we're going to be listing, there will be prizes that will be beamed daily on these platforms. And then I saw also a question in the chat box. I think I should just address it now, regarding the price. So when we started this week, the price was at 12.5 cents. However, because we're tracking the underlying prices on the JSE, it is now at 11.4. So which is why the prices need to be disclosed on a daily basis, which you will see. But you're also free to engage any of the participants, which I will show after my presentation, any of the participants that were mentioned, which are working on this product. So First Mutual and Agribos are at your disposal. And then the third benefit is that it is accessible to any investors, so retail, pension funds, trust funds, corporates, institutionals, government officials, anyone can access this product. It's open to all. And then you also have foreign linked dividends, seeing that you would have invested in USD. So you will be receiving also your dividends in the currency that you've invested in, which is the USD. Then moving on. So each investment, as we are aware, has its own risks. But as mentioned earlier, the manager and the sponsoring broker have sat down and also worked on ways in which we can mitigate these risks to the investor. So firstly, we do have market volatility, given that we're operating with at least 3 exchanges. So New York Stock Exchange, as you noticed, some of the counters are dually listed. So New York Stock Exchange, JSE, and also the VFX, which we are listing on the 8th. And then you also have liquidity risk, in the sense that you might find that units may not be readily available at the time that you want to purchase on the VFX. But this is where the sponsoring broker comes in. This is where our role as Agribos then comes in, where we come in. If there's high demand, we will bring to you units with the assistance of the manager, who is the sponsor. And then if there's also high supply in the units, let's say people are trying to offload their units, we will also come in with purchasing power there in terms of demand. And then you also have trading risk, which is similar to the liquidity risk and the market volatility, because we're operating with many different markets. So you will find that there are trading risk, which are associated to the ETF. And then you also have a price risk, as mentioned earlier. The NAV, which is on the VFEX, might not reflect the underlying performance of what is going on. So maybe you might have high demand on the VFEX since it is a new product, and the price on the VFX might be higher than what the actual NAV might be. So we will be coming in as a market maker to balance off that price so that we do not prejudice any investors. And then you also have regulatory and political risks, given that the ETF is operating in 2 different countries. So yes, we do not have control on what regulation changes happen in South Africa, but we will, with the help of our advisors in South Africa, which is the broker we have partnered with in South Africa. We will be having assistance there on how best we can go about the regulatory and political risk in South Africa. And then also in Zimbabwe on the VFX, we will be assisted with the VFEX on any changes that may affect the investor. But so far, I'm sure we'll be good. And then moving on, so these are the participants. You will also find these contact details in the prospectus. So I will move on the onboarding process. So as mentioned earlier, anyone can invest. So in terms of individuals, the requirements are your identification, which is your national ID or your passport, can be certified, or just a picture of it to prove that you are the person who's subscribing. And then we'll also require you to, at these preliminary stages, since we're still offline of the VFX, we will require you to fill in a subscription form, which is available on First Mutual website. And you can also email the participants that were mentioned earlier. So First Mutual, Agribos, and CorpServe, who is the transfer secretary. And then also share the proof of payment. So for the proof of payment, we do not allow cash deposits. So you will have to go through the bank and make a transfer to the bank details, which are embedded in the subscription form, which is the trust account sitting with CBZ. As mentioned earlier, this is the bank account which has the exchange control approval. So currently we will be going through that. And then for corporates, we have divided them into 2. So we have companies, and also trust funds are considered as corporates. So under companies, we will require you your new registered documents. So your CR14, Certificate of Incorporation, Memorandum of Articles and Association, your KYC. So these are similar to the individuals. So your national ID, as well as your proof of residence for the directors, and also choose passport-sized photos, which for this one, they're not really necessary if we do have the national IDs for the directors. And then on trust funds, we will require the trust registration document. So that will be the certified copy of the registered trust deed to prove the existence of the trust, and also the legal framework of the trust. And then we will, similar as to the individual, require the trustee's identification, so your national ID as well as your proof of residence. And then we'll also request to have a formal list of the individuals who are allowed to operate on behalf of the trust. And then, so the threshold, this is just a minimum, it's not a limit. So for retails, individuals, as mentioned earlier, it is $100. But for C-Trade users, you are allowed to invest less, given that they will be pooling funds on your behalf, since they use one CSD numbers. And then for institutional investors, so that's your companies, your trust funds, your corporates, and any registered companies, the minimum will be 1,000, but this is not a limit. We will encourage you to invest more, because the more you invest, the more benefits you will see, the more dividends you will see in terms of the percentage of your initial investment. And this does not mean that you can only invest once. You are allowed to keep pumping in your funds whenever you have disposable income. Do please bring it in for investments of the gold ETF. So Sorry. Thank you very much. Maybe just to explain the process for purchasing. It's not part of the slides, but so the process when purchasing currently, you will send your funds via the bank, and then once you've sent the funds, First Mutual Wealth will pull those funds, and then via the RBZ, once we get approval for us to externalize the funds to South Africa, the funds will be sent to our JSE broker, with our FNB account. And then once the shares have been bought, the shares will be brought back into Zimbabwe. And then First Mutual, as well as the transfer secretary, will create units which will then be credited into your personal accounts. So which is why we require each investor to have a VFEX account, because these units will be sitting in your VFEX account. Thank you very much. Marjorie, I will hand over back the mic to you if there are any questions regarding the process flow or onboarding or anything regarding the presentation as a whole. Thank you very much.
Thank you very much, Tadiwa, for taking us through your presentation. I'm seeing we are behind time, but I think our presenters will answer these questions as briefly as possible, but also being clear and simple enough for our audience to understand. So I'll just do a quick rundown of all the questions that are left in the chat box. Karakadze was asking how many units have been reserved specifically for retail investors, if there has been any reservation for them. So anyone from the FMW team can take that up.
All right, I'll take that up. The shortest answer is that we haven't had the need to reserve any units for retail investors. We're required by the VFX to have at least 30% of any listed entity to be held by the public. So far, over 60% of subscriptions have been coming in from retail investors. So there's been no need to actually reserve. Also remember that Sandra did indicate that it's an open-ended fund. We are at liberty to actually create units until we get to the $10 million target. So there's been no need to reserve units for retail investors. You will get the securities if you subscribe.
Okay, then the next question is from Shikomborero, and he's asking, could we have the actual numbers to understand how much has been put into the companies and the ETF? This will help us understand the cost structure incurred by the fund manager. I see this has not been part of the prospectus. So I think if you can look up the abridged prospectus or the full one, you can see so far the amount that have been invested in these particular securities. There's a table that clearly states that. But as of now, given that the subscription is open and people are putting in their funds, no new securities have been purchased, but you can refer to the abridged prospectus. I'm sure you can see figures on how much has been bought on each of the respective counters at the time of publication of that prospectus. The next question is from Godfrey. No, this was answered as part of Tadiwa's presentation, so I think I'll skip that. Tatenda is asking, what is the dividend policy of the ETF?
So I'll take that. So each of the 4 gold mining companies do pay dividends at different times. Some pay quarterly, some pay annually, some pay half annually. So the policy for the fund is to accumulate dividends over 2 quarters and pay out any net dividends to unit holders less fund expenses. So we're actually not allowed to actually hold cash. All the dividend proceeds, less any fund expenses, will be paid out to unit holders as a dividend.
Then Pride was asking, of the 10 million target with the listing nearing, how much has been raised through subscription, and are you on track to meet the minimum threshold?
That question was answered early on when we talked about the minimum of 500,000 and that we've already breached that minimum.
Yeah, thanks for that. And obviously, the subscription is still open. At the end of the subscription period, I'm sure FMW will publish the results of how much they would have managed to raise before listing. So just look out on their website and the VFX website, you will see the results published there. Takuzo is asking, why gold? Why did you go with gold, not any other commodity?
So I think for the simple reason that gold is an easy commodity to understand. Also, when we started the process of applying for this product, the gold price were obviously more attractive than they are now. But I think Tendai also indicated that there's still some headway to make in terms of gold. Also, gold is a long-term preserver of capital. Gold has outperformed global inflation over the past 100 years. And we also wanted a product that could also serve the Zimbabwean public in terms of inflation protection over the long term. So that's why we opted for gold as an initial product to offer to potential investors.
Okay, so there's Simba who is asking, you mentioned that the ETF, which has 50% of the weighting, has an underlying asset of real gold, but you have these gold companies as well that constitute 50%. He's asking how consistent in performance are these gold mining companies?
So we choose gold mining companies that have aggressive profit margins. We also choose gold mining companies that have attractive dividend yields. And the reason why we selected gold mining companies is that we also wanted an asset that could pay out a dividend. So that's the rationale for also selecting gold mining companies. And what we've also discovered is that gold mining companies actually perform better when gold prices are rising than the actual gold itself. So it's actually a performance enhancer to the gold price. And I think it's kind of worked out well in terms of the initial performance of the gold ETF. So that's the rationale for those that selection of gold mining companies.
Thank you for that. I hope they answered. This one is not a question, but just a pat on the back from Brighton. He's saying from me, just to say well done to the FMW team and all the parties involved in this. It's a unique product and aligned to our bias as Zimbabweans towards commodities. So it's just someone commending your efforts and what you've done to bring this product on the market. Onias is asking, what laws will govern withdrawals from this fund, e.g., the RBZ retentions, the taxes, and all that money movement?
So the bank account that will house the funds that you'll be placing for investment has exchange control approval as a free funds account. So it's not like a mining company's corporate account where there are retentions that will be applied. It's more or less like your Nostro account where you can actually purchase goods offshore and receive money even from the diaspora and not get any retentions in that fund. So it's a free funds account, which means that there are no restrictions. In terms of taxes, the broker account in South Africa is listed as a foreign investor account, so it's not liable for capital gains tax, which means it's actually tax efficient. The only charges that pertain to the actual acquisition of shares will obviously be the trading fees. And the trading fees in South Africa are significantly lower than we even see on the VFX. That's not to say that we're not also advocating for the trades to also happen on the VFX. We actually believe that the trades on the VFX will actually give quicker settlement in the offshore route. But yeah, the Nostra account has no restrictions. It's a free funds trading account that has exchange control approval.
Thanks, Simba. Fungai said, maybe I missed it. What is the strategy in terms of value preservation, appreciation, and all that?
I think I kind of answered that with the theme of what gold has performed in terms of inflation. So I think that will apply to, in terms of value preservation, what gold actually does as a commodity.
Noted. We are saying the subscription is open. Listing is on the 8th. Someone is asking, when is the last day to subscribe? Because obviously it's not infinite.
Yes. So yes, we do have a listing date of 8 May. So for purposes of the listing process, we do have to have an opening period for subscription and a closing period for subscription so that we can actually indicate the subscription results. But for operational purposes, subscriptions will continue even after the closing date. So the closing date is just for us to measure how much we'd have actually raised by the closing date. Don't be dissuaded by the closing date being so soon and the listing date also being so soon. We're still going to be accepting subscriptions. Sandra did indicate what an open-ended fund is, which means that the fund will remain open in perpetuity until us as the fund managers decide that we might be deciding to close the fund. But as far as we're concerned, we want to make this bigger than the 10 million. So the fund will be open for quite a while, and there's still a lot of time to actually subscribe.
Thank you. Francisca is asking, did the product not miss the gold price boom? How much growth is anticipated that is expected to then subsequently grow portfolio returns?
I think that was partially answered by Tendaishe. Tendaishe, would you want to comment on your forecast for gold price?
Okay, Simba, I can take that one. I think in our main presentation earlier on, I alluded to the fact that our current gold prices have really come down a bit at around 4.6. But when we look at it from a 1-year investment horizon in terms of timelines that an investor would want to just as guidelines, and also 3-year, we are seeing, or we are anticipating positive growth. And I think that slide was also speaking to, I think, about 5 or 6 independent researchers and forecasters around gold prices to also help us align our expectations. And the range in terms of return to say changes in the prices, I think we're just quite wide from as high as 26.1% as the lower end to around 110% as the upper end of what is expected during those years and those investment horizons that we have stipulated to. So what we're actually saying is that much improvement is expected. It's actually better now that the base that you as the investor will actually engage in this product will be quite low, given that the prices have dipped. So as we go forward, we expect more returns for you, and we advise you to get in right now when the prices are quite low, given that the outlook is expecting more in terms of the price increases. So those are my comments.
Thank you, Tendai. There was a new news that we had asked, how will dividend declaration and payment be structured? For example, one JSE listed company declares a dividend. Simba?
So because we've got 4 JSE listed gold mining companies, they declare dividends at different times, some quarterly, some biannually, some annually. We will collect dividends over the period of 2 quarters. So after every 2-quarter period, we then intend to actually pay out all that cash as dividend, less any fund expenses. It's not a policy per se, but according to the trust deed, we are not permitted to hold cash. So any cash that comes in the form of dividend will be paid back to unit holders as dividend.
Noted. Another question from Godfrey is asking, some of the answers are not clear to him. Is asking is saying historical returns do not really tell investors much. What about turnover? That's the rebalancing metrics, the drawdowns, the weight stability indices, and for risk-adjusted performance, the omega ratio. I think this one is quite a learned one. He wants all the nitty-gritties, all the ratios, and all the stats available. I'm not sure if you can answer him right now and provide the stats, or he can even then contact you later if he needs any more stats provided.
Yeah, so you can get in touch with me for any additional statistics, but just suffice to say that in terms of liquidity of the assets and how we backtested the product, the Johannesburg Stock Exchange trades in 1 week what the combined Zimbabwe Stock Exchange and Victoria Falls Stock Exchange trade in a week. So there's no risk of sticky prices or price movement due to our purchases or sales of these securities. But you can definitely get in touch with me so that we have the intellectual conversation that he might require in terms of statistics. But yeah, the back testing is not going to be affected by liquidity.
All right. Thanks for that. I hope, Godfrey, you can even take it outside of this meeting and get in touch with Simba. I'm sure you'll be happy to provide any additional stats that give you comfort. Onias is asking, are there minimum periods within which you can not take profits after investing?
Simple answer is there are no minimum periods. The asset will be listed on the VFX. You buy it today, you can sell it tomorrow. You do have a T+2. So yeah, there are no minimum investment periods. So if they feel that they've made their money and they want to sell, they can sell on the VFX. So yeah, no minimums.
Okay, then Kudzanai was asking, how do I get in touch for more information? I'm sure Tendai posted her email in the chat box, so those who might want to get in touch with the team. I will, there's Tendai's email, there's the First Mutual Group email. I'm sure anyone will be available in the office will be answering any of your questions. Simba, I'm not sure if you had also posted your email in the chat. If not, maybe you can put it in and people can get in touch even after this meeting. Then Norman is asking, is the ETF on JSE? I think they just need clarity as there is an ETF within the ETF. So maybe just clarify that.
Yeah, so the ETF is listed on the Victoria Falls Stock Exchange. The underlying securities are what is listed on the JSE. The ETF is listed on the Victoria Falls Stock Exchange.
I hope he gives that that clarity that this particular ETF we're talking about, the FMW Gold ETF, is going to be listed on the 8th on the Victoria Falls Stock Exchange. But within that ETF, 50% of the portfolio, which is the One Invest ETF, is the one that is listed on the JSE, as well as the rest of the underlying gold mining companies. Some of these questions were answered as we went on. As Jikomborere is asking, I was trying to get to understand how much you as the fund manager who incur in terms of costs in facilitating the buying of these 10 million shares.
So as the fund manager, we are not incurring costs. Remember that even if you are purchasing shares through a broker on the VFX, for example, you incur trading costs. But that's part and parcel of actually acquiring the costs. I don't think it would be economically viable for us to foot expenses on behalf of investors, given that we also want to grow the fund to $50 million US. So we just charge a management fee of 0.5% per annum on the actual fund value. But the investor foots the trading costs.
Okay, then I think Fanny also has a similar question along those lines. He's saying fund expenses, what are they typically? So maybe just break it down for them, the trustee charges and all the expenses the fund will incur.
Okay, so I think the biggest expense is the management fee for the fund manager, which is First Mutual Wealth. That's 0.5%. The custodian charges 0.1%. There are other specialists, advisors like auditors, for example, those who charge anything. We're trying to keep the cost at around $5,000 per year. So I'd say if we're gonna be, try to estimate the cost, maybe around 0.67 to 0.7% will be the total charges that will accrue to the fund per year.
All right, thanks so much. This one is just a compliment from James Booth. He says, congratulations, First Mutual team.
Thank you.
Then I'm sure some are finding it hard to scroll down and find the contact details of the sponsoring broker as well as the individuals that gave presentations today. So I think we'll share the presentations made after the webinar, as well as the contact details of the First Mutual Wealth team and the Agribos team. So you can check on that email to get further information or details from them. Emmanuel is asking, is there any fungibility involved in these ETFs? Since you have underlying that are on JSE, you probably would want to redeem and go back to JSE and sell the underlyings.
Yeah, so remember the VFX is going to be the exchange where the gold ETF is listed and the underlying securities are listed on the Johannesburg Stock Exchange. So remember, every day we'll be posting the value of the securities that are underlying the gold ETF. So if the price of the securities on the JSE seem cheap, you can sell the securities you have on the VFX and make an application to purchase the securities on the JSE. It's actually a mechanism which we think will ensure that the price is very close to the underlying securities. So it's not fungible per se, but we think that for the smart investors, they can actually game the system and make profits whenever the prices are different for the VFX and the JSE.
All right. Thank you so much. Sandra, I see you have your hand up.
All right, thank you. Maybe if I can just add to what Simba said. So what is fungible is not the FMW Gold ETF. The FMW Gold ETF is only listed on the Victoria Falls Stock Exchange. So the ETF itself, if you buy units of the ETF, those units are not fungible to go back on the JSE. What is fungible, or what you might not fungible per se, but what you might play around with is the actual underlying. So remember, if you buy you can buy the basket of securities as they are on the JSE, and you take them to the authorized participant and they give you units. Or you can take your units, you buy your units on the Victoria Falls Stock Exchange, you give them back to the authorized participant, and they give you securities that are on the JSE. So in that whole process, there are no, it's not necessarily fungibility whereby you are moving securities from one exchange to the other. So perhaps for the benefit of other investors, so fungibility is, for example, when you're looking at Sidco International. So Sidco International, as is listed on the Botswana Stock Exchange and on the Victoria Falls Stock Exchange. So you can buy shares of Sidco International on the Victoria Falls Stock Exchange, move them to the Botswana Stock Exchange, and sell them on the Botswana Stock Exchange. Obviously, this is subject to terms and conditions stipulated by the Reserve Bank of Zimbabwe, subject to exchange control approvals. But essentially, when it comes to the FMW Gold ETF, what you can do is you can redeem the underlying from the authorized participant, not trying to sell the First Mutual Wealth Gold ETF on the JSE. It's not on the JSE. What they simply did was take securities on the JSE, package them nicely into one product, and came on the Victoria Falls Stock Exchange, subdivided those underlyings into smaller products and sold them on the Victoria Falls Stock Exchange. So in the instance that you decide that you no longer want the units, you want the underlying, you go to the authorized participants. They've got certain minimums that they require, and there are fees that are related to that. All that information is available in the prospectus. You can be able to redeem the underlying. The same way you can go on the JSE, buy the underlying, take them to the authorized participant, and get units that are actually listed on the VFX and sell them on the Victoria Falls Stock Exchange.
Thank you so much, Sandra, for adding that. Simba, do you have anything else? Oh,
No, I think Sandra summed it up very well. That's precisely what you can do.
okay, that's fine. I think we've tried to answer all the questions that were in the chat box. Apologies if we missed any. You can feel free to get in touch with the team after this webinar, as we have to go in because of the time. We were supposed to end at 11:30, but it's now almost 12. And we thank you so much for your patience and being with us until this time and listening in to this intensive presentations on these new products. We will be sharing the presentations. There was also a recording. Once that's done, it could be uploaded on the Victoria Falls Stock Exchange YouTube channel. You can then go ahead and check the recording of this webinar if you need to listen back to anything as well. So I think before we go, I will give the presenters just a bit of a minute, anyone to just say their last words. I will start with Sandra. Anything you want to say? Are there any commodity-based ETFs that you have in the pipeline exchange, and can the investors look forward to more products like this?
All right, thank you very much, Judy. So we're so proud to announce that with the new regulations that have come into place, the SI 62 and 63 of 2026 actually has added more products of the things that we're able to do. We're now able to do digital currencies, etc., etc. So in terms of commodity-based ETFs or commodity-based funds, we do have regulations allowing those to happen, and we're continuously engaging issuers, the likes of First Mutual, to issue such kind of instruments. And as the VFX, we remain available to any prospective issuers that would like to issue these instruments, and we'll be happy to guide them through the process. And the investors, we're also here to protect and to guide you. So in case you've got any question or queries, feel free to get in contact with the VFX direct team. I think I'll also put the email for the VFX direct team and the chat box. So if you've got any questions or queries, it could be with this particular product or with other products, just feel free to contact us and we'll be happy to assist you. Thank you very much.
Thank you so much, Sandra, for your final words. Tadiwa, as the sponsoring broker, what are your parting words and your words of encouragement to anyone who would want to invest in this product?
All right, thank you very much, Marjorie. So just from Team Agribus, we all know that Agribus brings you partnerships with the different. So we will not disappoint you if you do decide to partner with us with this, especially on subscriptions. We will assist you adequately for you to have your units into your account seamlessly. And also, just to emphasize, this is a new product on the VFEX. It's one of its kind, and there are more, I'm sure, that are coming, as Sandra alluded. So we're looking forward to your subscriptions, and yeah, have a wonderful day. Thank you.
All right, thank you so much, Tadiwa. And in the chat box, Tatenda is also asking if either the exchange or even the First Mutual team can also consider exposing the investors to the South African property market. If you can also do a product linked to that, I think the investors would appreciate that exposure. Tendai, any final words?
Thank you for the opportunity, and thank you for taking time to hear us on our product. We want to say to you, First Mutual Wealth has got your hand on this. Let's embark on this journey and make use of this opportunity whilst we have it. We promise you more innovation, and we promise you consistency, integrity in your investments. Please get in touch and learn more about this product and invest whilst there's still more time for returns. Thank you.
Thank you so much, Tendai. Simba, a roundup for everything that we have discussed today.
Yeah, well, I think we've presented what we've presented. You know what the pudding looks like. I would like you to taste that pudding. But I think in terms of what we are trying to do, this is very exciting for us. And we think that it's an opportunity for Zimbabweans to also participate in investment markets that were not always open to them. So join us on this journey as we also guide you to preserve your future. We think that this product will be very relevant, not only in the short term, but in the very long term, because it allows you to even save for the long term. I think that's a term that Zimbabweans are not too familiar with, but I think that this product can definitely give you that access. So thank you again, the team at the VFX, for giving us this opportunity, and for all the investors that have indulged and stayed on with us for this long. So thank you. I think it shows the interest in the product, and hopefully we'll see your subscription forms coming through. So thank you.
Thank you so much, Simba, and thank you to the rest of the presenters who gave us all the necessary information today. Subscriptions are open. The VFX Direct platform is open 24/7. Just log onto the platform. It's easy as 1, 2, 3. By the end of the day, you would have your units waiting for you. And thank you so much, everyone, for sparing your time in your busy schedules to be with us today. And don't hesitate to ask if you have any further questions. We shall be sharing the contact details of everyone, and you can do follow-ups and invest with confidence. Thank you so much, and enjoy the rest of your day.
Thank you. Good day.